we are going to work problem E419 from page 776 in your textbook. Now, in this problem, we're going to take some numbers that come from the income statement and changes that come from 2 years worth of the balance sheet, and we're going to create the operating activities section of the cash flow statement. So only the operating activities section, and that's what will be on your test, just the operating activities section. Alright, so normally you would have an income statement in front of you and a balance sheet with 2 years. That's what we call a comparative statement. But in this little example, they just tell us the numbers that you might use. Some of them we don't use. In this example, here's what we're going to be doing. Alright, so we need to start with our statement, right? And so I've gone ahead and put a title on there just like anything. I wrote partial here just because we're not doing the whole thing, just the operating section. And we do need to put in a title. So this is cash flows from operating activities. Right, and so we start with always net income. That's what an indirect cash flow statement starts with. We start with net income and reconcile our cash flows to that net income, right? Because that's where our operating activities are. All right, so there's net income right there. So sales, some of the stuff we don't actually need for this section. So we're going to go, okay, well, net income, we definitely need that. So that's what we start out with, our net income. And so we'll just put that over here. And that was 36,000. Okay. Now, the next thing you do, so you start out with your net income. Now we're going to do our adjustments, right? Increases and decreases and changes that we're going to add and subtract to and from the net income. All right, so first of all, we're going to just title that Adjustments to Reconcile Net Income to Net Cash. Right, because that's the point. We're going to adjust and eventually we'll say how much cash did we make from operations. So the first one you always start with, if they have it, is depreciation expense. And so we do have that. Okay, so I'm just going to check there. It's 5,000. So depreciation expense we always add that back in. So that's always a positive number, right? So depreciation expense. And that's because it's a non-cash expense, so it shouldn't be part of the cash flow that came out, so we're going to add it back. Right, we're adjusting net income to turn it into cash flow. So this was a non-cash item that was taken out, so we just add it back in. Now we would look at the changes and add or subtract them from the balance sheet across 2 years. Did the balance sheet number increase or decrease? And we're looking only at current, right? Because current assets and current liabilities are what go into operating activities, right? That's your working capital items. All right. So in this case, we had a loss on sale of land. All right. So that's something that would have been taken out of net income that we need to add back in, right? So that was a cash flow out, a loss, that was taken out of net income. We add it back in. So that's 4,000. So we're just adjusting the cash flow. Because it came out, we add it back in. Acquisition of land, that's revenue we don't use. That we wouldn't use because acquisition of land would not appear on the income statement, so we don't have to adjust net income for it. And that's actually what we would call an investing activity, so it wouldn't go in this section. Depreciation expense we already used. Okay, so next thing you would look at is you would compare your balance sheet current assets, and here they're telling us current assets other than cash. This is important. You don't adjust cash, right? That's the point. So you don't worry about cash when you're doing this adjustment. So there are things like their inventory, their accounts receivable and things increased. All right? So on assets, if assets increase, you subtract that cash flow from the net income. All right, so when assets increase, that's a subtract. So increase current assets other than cash. So you don't put cash on this. All right, so because they increased, you're going to subtract them. So I'm putting brackets there to show that they subtract. All right, so we're going to add depreciation back in, add back in loss on sale of land, subtract the increase in current assets, and the only other thing we have is a decrease in current liabilities. Okay, so decrease current liabilities. So those are things like accounts payable, unearned revenue, your accruals like taxes payable, salaries payable, things like that. Those are your current liabilities. So they decreased by $19,000, so you subtract it. All right, so you got to remember that liabilities work opposite of the way assets do. So in this case, you increased it, so you subtract it because it's assets. In this case, it decreased, but you still subtract because they're liabilities. So now, I'm going to total these, right? So 5,000 plus 4,000 is 9,000, minus 10,000 is going to be a negative 1,000, minus 19,000 is going to be a negative 20,000. All right, so this is the cash flow total of these. So $20,000 cash flowed out, right? So we take 36,000 minus 20,000, and that equals 16,000, and we call that net cash provided by operating activities. Right, 16,000. So the reason we subtracted is because these add up to a negative number, 20,000. If these added up to a positive, let's say this was the negatives and these were the positive, then you would add it, right? The cash flow can go either way, add or subtract. So it's not that you always subtract this number, it's that these numbers add up to a negative number. So 36,000 minus 20,000 is 16,000. So this is the cash flow from operations. Now, normally an accountant would go on and do investing and financing, more sections, but we're not going to do that, so don't worry too much about that.